Hello, today we're going to be looking at EBIX here as requested by one of our viewers. We're going to take a little look at some of the things that are projected out for them. Like if you go to the growth here, they're projecting at negative 16% per seeking alpha. There's some, things that are red flags that concern me a little bit, just looking into little things. If you come down here, their PE gap trailing 12 months is at 9. Their actual price to book ratio is at 0.48. Their price cash flow trailing 12 months is 4.73, and that's decreased, a difference of 74% compared to the sector median. If you do come over here, though, to their earnings per share, as you can see where they are from 2013, well, their most recent quarter was 0.01. So in 2022, if you look at them, 0.62, 0.63, and now we're starting to really go down 0.59, 0.26, 0.23, 0.01. So those are some concerning things going forward. Their net income, as you can see, it's gone all the way to zero. So look, in 2020, 19, 22, 16, 15, 15, 19, 19, 18, 870. So you're going to want to find out why their net income is really greatly being affected, especially in 2022 with 65 million. That is a good net income, but it's also declining over the years. As you can see, 2016 94, 2017 101, 2022 65. So it's going down. Want to go to their assets and liabilities. If you look at their total assets, we have 1,541,000,000 in assets, and total liabilities we have 864 million. Their long-term debt $0 as of the last quarter, 2022. So they have no long-term debt, which is always a good thing. Their cash on hand, it's 87 million as of the last quarter. Cash on hand for 2022 138, but it's a huge jump from 2024. So there are some good things that you could look into. So you're really going to want to look into these things if you're interested in EBIX. I am not deep into this company. I'm just looking over some things real quickly for a viewer. As you can see, the total assets is really good versus the total liabilities. The cash on hand, pretty decent. No long-term debt. That doesn't mean that they don't have debt. How you're going to figure that out is you come over here to financials and you want to look at through their income and their cash flow statements. Um, this will show you their basic EPS. See, for all those years that we were already showing you on the other ones, it shows it on these screens too. So if you just want to look at it in one screen, but we come over here to the balance sheet. As you can see, look at total liabilities in 2012 and then what they are now. Total assets, look what they were in 2012 and then look at what they are now. So you can see the difference in those two. It's a nice thing to look at over here on the screens. But as we were talking about, let's go to this cash flow statement. Let's look at the net current debt. Doesn't look like there is any, so that's really good. But there still are things that are concerning to me, especially the net cash flow. It was really, really good on a lot of these years, and more recently, it's just not as good as it was in the past. So that is something to look forward to. The common stock dividends paid, well, they don't pay dividends. This is just stock-based compensation. Oh, as you can see right there. So these are things that you're going to want to look into. We'll come over here to the intrinsic value calculator. We're going to use discounted cash flow for this company. We have in 2013 55.83. This is in millions. And then you can see the numbers here. And then most recently in 2022, we got 56. This brings us to an average free cash flow of $59. We're going to use a negative 11% growth rate. As you can see in Seeking Alpha, when we went over here to growth, they were using negative 16%. But I pulled together a lot of different, not from Seeking Alpha, but a lot of different analysts, as you can see. Well, there's not a lot, but there's a few. And then we have a sales growth estimation next year of negative 11%. So we're going to use a negative 11%. And then we're going to use 2%. We're giving ourselves a 10% discount rate because, there's a lot more uncertainty with this company. You can look into our articles or look into their financials yourself. We have 31 million outstanding shares. This brings us to a discounted cash flow price of $10.03. With a 10% discount rate, it's $9.03. Well, if you come over here and you come to prices, look, they're most recently trading at 988, so this is right around the ballpark of where it's trading at right now. So you're going to really have to dive into this company and determine what things look like for the future. If you think that they're trading at a good price, you're going to want to look into their investor meetings and what they're putting out, and their most recent quarter that's going to be coming up soon, because it's October, we're turning right into quarterly reports that are going to be released to the public. So those are things you're going to dive into if you're interested in this company. But currently, with the calculations that I did based upon their cash flow since 2013, and using a negative 11% growth rate, we're coming to $10.03. And then 10% discount rate. Obviously, if you're going to be investing in a company like this, I would really like to get into a 20 to 30% discount rate. But yeah, if you guys are interested in this company, let me know what you think. Let me know what you think is fair value. Let me know what their future looks like. I don't know too much about this company, but I was just going based upon the numbers that I see now from an objective standpoint, just based upon the free cash flow. This is the valuation that I'm coming up with. Please give yourself a margin of safety if you also determine the value somewhere near to what they're currently trading at. Thank you.